Pinkisco Media webinars addressing the impact of the coronavirus on facets of New York City real estate. Today, we're discussing multifamily ownership, leasing, and property sales. We have 5 panelists. I'd like to introduce them. Jonathan Miller, President and CEO of Miller Samuel, one of the leading valuation experts in the city. Scott Singer, President of Singer and Bassuk organization, who arranges financing for many of the city's multi-generational owners. Maggie McCormick, President of A&E Real Estate, that has more than 10,000 mostly rent-regulated units in the city. It's one of the largest. Carole Bloom is the Executive Vice President of Leasing at Halstead Development Marketing, who is active, very active, representing developers in their buildings. And Ofer Cohen, President of TerraCRG, a leading property sales firm focused on Brooklyn. As we all know, politicians and housing advocates are pushing for the suspension of rent today, but there's no plan to offer a mortgage relief to the multifamily landlords currently. There's no money if there's no money from renters, that means there's no money for the landlords, which means less money for the banks, which could lead the banks to eventually be in violation of the cash reserve requirements. There's some effort to get on the federal level, but that was people had hoped that would be today, but they didn't pass that. So that's kind of the situation as it affects multifamily in the main. But we're going to get into our panelists to discuss what they're looking at specifically. We'd like to start the conversation with Jonathan Miller, who's got some historical perspective on the crisis. Jonathan.
Sure. Thanks, and I'm glad to be here, and it's good to see everybody, and I hope everybody's safe. One of the things that I think of when this happened, when we basically my whole company is shut down, everybody's working remotely, there's a lot of concern, is we've been in Manhattan, been through a couple of other significant crises over the last 25 years or so. One was 9/11 and one was the Lehman moment. And both are characterized by empty streets to a certain degree, a tremendous amount of uncertainty, and not a clear understanding of how this is going to play out. I think what's different this time, and everybody always says it's different this time, but is that in those events, and I'm not comparing the 3 events, the virus, 9/11, and the Lehman or the financial crisis, as anywhere the same. It's just that the fact is that commerce seemed to stop or pause, and there's a lack of understanding where we go. What we have in this situation that's different is it's not a singular moment. It's really something that is still is not understood, and we're not getting a lot of clear direction. And we're really everybody's just sort of camped out waiting for answers. So it makes understanding the multifamily market a little challenging. The thing I caution everybody is not to jump to conclusions. I know that after 9/11, 5 weeks after 9/11, and I'm not saying it's the same scenario, but we saw 5-way bidding wars on a one-bedroom apartment in the East 50s in a non-doorman building, something that you wouldn't expect, and then things changed. This is, I think, can be a lot more drawn out.
Okay, that's are you starting, just a quick thing, are you starting to see immediate impact on the rental side? Just from the data side?
From the data side, no. Just on real quick on the sales side is that we're seeing inventory normally ramp up for the spring market. Inventory this time of year over the last 5 years has averaged roughly about a 10% increase from year end through the end of March. And right now inventory is down 5%. So we have many consumers not putting their properties on the market or pulling them off a market, which I think probably fares pretty well for the rental market. And I think there's going to be a lot of renewal activity as people don't want to run around and look at apartments.
Well, all right. I'm just going to quickly reintroduce people in case people who just have logged on. We have today, that was Jonathan Miller, President and CEO speaking. President and CEO of Miller Samuel. We have Scott Singer, president of Singer and Bassuk, Maggie McCormick, president of A&E Real Estate, Carole Bloom, EVP of Leasing at Halstead Development Marketing, and Ofer Cohen, president of TerraCRG. Ofer, if you could start with this next portion of the webinar. I wanted to ask, what are you seeing right now, and what's your experience sort of day to day, and how are you managing that?
Yeah, so obviously, you know, people in our roles have two jobs, you know, or maybe three, right? If you're a parent. One is to manage your cash flow and manage your employee base and manage your staff to work remotely and to kind of prepare for a business shutdown that we don't really know if it's going to be 30 days, 60 days, 90 days. And that is a big point of what we're experiencing right now, because the length of an economic shutdown in New York City is what would make this a V-shape, a U-shape, or other shape recoveries, right? And the governor just was talking about what can we do now. He's already talking about how can we bring people back to work, because everybody's realizing that this is completely not sustainable. But yeah, I mean, so you have the job of like managing resources internally, and then you have to send, you know, continuously, I guess, stay engaged with the market and get information flowing. You know, our job as brokers that deal with landlords and deal with investors and private equity funds and people that are sort of either in the middle of transaction, before a transaction, right after a transaction, is to kind of gauge where their head is. And the last week it's been really, really challenging. And so, you know, what I've been telling my team was that right now we just need to stay in touch with the market and make sure that people are, that information is flowing properly, right? Because, you know, Maggie has some ideas. Well, Maggie has some ideas of how she's dealing with things that could potentially help someone else, and Carole may be dealing with a landlord that has experienced something that, you know, in other words, we're in the middle of it, right? Every landlord or every owner of real estate may know one guy that owns another piece of real estate. And that's becoming increasingly, when you don't have any kind of water cooler conversations, brokers become kind of pivotal in sharing information and ideas of how people are experiencing it. I mean, some of it is just group therapy and some of it is actually meaningful. At the same time, you know, I've been trying to, through my board involvement, primarily at the Downtown Brooklyn Partnership, but also to some extent at Brooklyn Chamber of Commerce, try to identify needs from hospitals and try to kind of see if we can link some of the needs, city needs, state needs, hospital needs with private, you know, ownership. And so we've been kind of working to try to bridge those gaps. And obviously there's a lot of gaps because nobody really knows who's going to pay for what and when hospital beds are going to be required and how to supply them. But
has anything happened with that? Have you guys started? Is there talk of getting hotels converted to?
Yeah, there have been conversations as recently as Friday, and there are hotel owners and actually multifamily owners with some vacant inventory that you know, suggested and proposed that they can put their properties as part of a solution. I mean, the city at this point is collecting the information. They haven't been, as far as I know, as of right this moment, they haven't been acting on anything yet.
Okay.
Adam, if I could pipe in, I'm
Sure.
on the Rebney's commercial division. Hi, I'm on Rebney's commercial division board of directors, and another effort I know that's happening is that Rebney is helping the city seek out warehouse space to use for as the hospital supplies come in. And so I've seen some positive traffic that front as well. So there are some specific parameters that I don't have at my fingertips now, but if anyone wants to reach out to me, I can connect them with Rebney. And that's if they have large blocks of warehouse space available on a medium duration basis.
And how that would be structured, I mean, not to get ahead of it, but it would be the city leasing the space or somehow the FEMA or something?
I'm really not sure. I saw one landlord respond today with an indication that they had, at least 100,000 square feet, let's say, that they were ready to make available on a rent-free basis for the next couple months.
Rent free, okay. So it's not
Yeah,
a
tried to help.
Okay.
This
Yeah,
is
okay.
this is an opportunity for landlords to to help with the effort, and there seems to be a response. Everybody's looking for ways to help. The exact specifics I can get but don't have right now.
Okay, thank you. Maggie, I wanted to hear like how I don't want to say how on earth, but like how are you managing like the tens of thousands of people?
Yeah, so I think similar to what Ofer was talking about earlier, the first challenge was figuring out how to get as many people out of our office and working from home as quickly as possible, while also being able to service our 10,000 apartments and our residents, more importantly. And so we first were setting up capabilities so that our front desk was ringing at our receptionist phone at home and still transferring to different departments. And we have our property managers working with our supers who are on the ground presence and are really the backbone of our operation any day, but more recently as well. They're cleaning the buildings regularly. They have Purell stations set up in the lobbies. And then obviously answering resident calls. We're getting a lot of calls recently about hardships, but also we have a lot of elderly residents in their apartments who are unable to access grocery stores or get the supplies they need. And so we're working with both employee volunteers and our building staff to help them get what they need. And at the same time, I think a lot of residential real estate in New York deals in a lot of paper. And so we've been dealing operationally with having to still be able to process any renewals or rent checks or things that come in through the mail and figure out how to get those to the people who are working from home on a work from home basis. So it's been no small feat trying to figure out how to keep as many people at home while still operating 10,000 apartments. But I think we've been impressed with what the team has done and how positive they've remained and how their ability to remain responsive to our residents and seamless throughout all of this.
Does all of this end up meaning that you need to hire people, or is this more work or less work, or how is it?
I think it's more of some kinds of work and less of other kinds of work. And so we definitely haven't been hiring, but I think everyone who's there has really risen to the challenge, so to speak. And
are you getting any direction from anybody about cleaning methods, like minimum? Is there like someone saying this is what you ought to do?
It's my understanding that there are some CDC sort of recommended materials or solutions to use, and we've been using those. But other than that, no, we've just made sure that the building staff has been cleaning several times daily, all the common areas, including door pulls and elevator buttons, things like that.
Okay. Carole, could you talk about how sort of the situation day to day, how you're managing it and
Sure.
How that is.
So in the various buildings that we have, there are residents that are coping very, very well, and they have the means to do that and whatever they need to do to take care of their families. Some have second homes, they've gone to those. Our staff in all the buildings is maintaining cleanliness throughout many times a day, as Maggie mentioned. The building staff is very in tune with who's in the building, who's not in the building, what their needs are, what specific things they can help with that they didn't really need to help with before. I think in general, from the leasing side and just from overseeing to make sure that the landlord feels that we're addressing their needs as well, we've been able to handle things virtually, and that's not new for me. I mean, I've been renting apartments sight unseen for over 20 years. So I think that we're doing that because there are people that need to actually come to New York, and we're able to rent apartments just virtually and have them pay us with their credit card and sign leases, and they're able to pick up their key. So
just is the volume
aspects.
sort of the same or much lower, or just
So
kind
it's
of
much
broadly?
lower, but the people that are looking are very serious.
Right.
I also know that in terms of virtually doing some other than leasing, we've also had some accepted offers from our sales teams. So there is business, but it's much, much less on a lower scale with very serious people.
Okay, well, thank you. Jonathan, I wanted to ask about the process of appraisals and how that's been impacted.
Well, one of the things that changed for us at 9 o'clock this morning is FHFA has loosened some of the requirements for appraisers who apparently were considered essential services in this in many states that are shutting down and not allowing people to run around and look at property. So we're able to do at least preliminarily, we're going to be able to do some things without inspecting, following up later down the road. But it's not going to be multifamily buildings. It'll just be on single occupancy type spaces. That was really a problem. I know we're talking about rentals, but the problem is that nobody could refinance because appraisers around the country were resisting, not willing to go into harm's way, basically. And this enables at least some fluid activity on the refi side and allows sales activity as well.
Wouldn't that impact like a building? Wouldn't you have to have an appraisal for a multifamily?
Yes, the difference is that there's not clarification yet on whether inspections can be delayed, or at this moment it's not clear. So right now it only seems to be relating to individual units, single family, condo, that sort of thing.
So that could be a delay for if someone wanted to refinance a building. I mean, we can.
Well, that's a challenge because the appraisal community largely is pushing back on that now. If we were having this webinar last Wednesday, it would be a larger number would be willing to do it, but every day that number has really fallen off because of what's known is that even if you're not in contact with people, the problem with New York is to get around for most people is public transportation, and you don't have to be symptomatic to be a carrier. So that's the concern by my profession anyway, and at least on the individual unit level, the lenders now have a vehicle to do something in the short term.
Is it just, Scott, quickly, have you heard anything about the impact if someone trying to refinance could not get an appraiser? Or is that down the line or something?
I haven't seen that issue specifically yet, where we did close a significant multifamily loan last week, middle of the week. The appraisal had already been done, so that wasn't an issue. Where there was a challenge on that one was around the title, and and it brings up a question that will impact many of the aspects of normal real estate transactions when you have offices that are closed. For example, the mortgage recording office, or and that then flows to any of the other city or municipal functions that are part of normal closings. And in that case, the office was functioning in a way that allowed the deal to get done, and there were creative suggestions that were thrown around between borrower and lender, and that deal got done because there was a collaborative approach. And I think that that's something that will be necessary to get deals done in this environment. We're seeing some positive continuing activity. There's very much a flight to quality and safety with regard to lenders looking at, okay, there is certainly uncertainty, but is this a property and a borrower and a location that is likely to continue to be viable after this dislocation? That's a first question. Second question is this a borrower and or property that can make it through the dislocation period? How, maybe the first question is if that's 45 days, if it's 90 days, is it longer? And there is a real differentiation in the market depending on the answers to those questions. I think lenders are looking to borrower history. So they are looking at is this an owner who made it through 2008, through 2001, through 1991? And what is the strength of that group now? And where we're seeing that play out is a few different ways. I spoke to a New York City commercial bank this morning who said that they are focusing entirely on their existing clients. So and one of the reasons is that they are able to see the deposits that those clients have in their bank. And so they have a real window into liquidity. We are seeing insurance companies who have a need for yield continue to quote deals, I believe with the intention to close them and move them forward, but with an acknowledgement or recognition of uncertainty along the way.
How are they pricing their, are you seeing large spreads between what the kind of risk is so abstract? Like, how do they even come down with a number?
That is a real challenge. And there is arbitrage in the market now, ranging from an inability to quote. I mean, we've seen other points in time when it has been difficult for lenders to price, and there are different ways that they approach. We had a conversation where a lender said, "I like this transaction. I would like to lend on it. I don't know what rate I can quote." So we could move ahead processing the loan to get as ready as we can to close. There may be obstacles. So Jonathan raises a very important point that frankly I hadn't thought of. If the appraiser can't get into the building, how can we work around that? Or will that get us to a point where we have to stop? Pricing for some lenders is in that, it sits there. But for others, they are looking to how they would have priced a deal a month ago, and then weighing the additional risk in the world in their spread and the decrease in the index cost in the treasury, and looking at the two and making a relative decision based on those two factors. And I would say in general, the pricing for non-recourse deals where we are able to get proposals is a bit higher than it was a month ago, but still within the realm of very attractive from an historical standpoint. But I don't want to overstate the ability to do financings now. This is very challenging, selective, and uncertain. The inbound calls that I'm getting from lenders tend to be from higher rate, more opportunistic bridge lenders who are not tied to either regulated banks or repo lines, or who have their own internal capital that was not fully deployed. Where we are reaching, yeah, go ahead.
As they're looking to try to, somebody's in a cash squeeze and just lend the money, and maybe, is that kind of loan to own direction or just like bridge loans? Or
no, I don't think it is. I mean, I have not seen any activities to date that I view as predatory. And I understand how it could sound like that from what I said about unregulated. I think these are lenders who are more expensive than other sources, but who are willing to take risk and be compensated for it now. And I have not heard, none of them have said to me that their pricing is marginally higher than it would have been before in a way that feels predatory.
Ofer,
I think in the same way that insurance.
Yeah, I think that I would love to reframe this conversation. This is a highly disruptive moment in the history of the world. Granted, New York City is the center of the world, and real estate is obviously the center of New York City, but let's Let's be honest. This is highly disruptive. Nobody's doing business as usual. Not last week, not this week. And it's a long deal cycle, transactional volume. You can't even start understanding what this does to the market in terms of transactional volume, because it takes 6 months for transactional volume to actually occur. Nobody's starting a new transaction right now because they're focused on their existing portfolio. You know, nobody's buying a new property before they know what they're doing with their existing portfolio. That's number one. Number two, lenders are doing the same thing. Lenders are reevaluating their position with their existing borrowers, right? So there's no point in allocating new capital when you don't even know what your cash reserve requirements are going to be to maintain your existing lending capacity. So it's very, very complicated. I don't think any one of us can pretend to know what's going on. But at the end of the day, you also have to understand that a lot of these lenders that are lending on multifamily in New York City have, indirectly exposure to small businesses that occupy the ground floor of some of these buildings. And these small businesses are on the front line of vulnerability right now in New York, because these are restaurants that may not come back to occupy that space. If this shuts down is more than 30 days, none of these businesses have more than 30 days on cash on hand to run their businesses. And so and sometimes, especially in Manhattan, the income, right, in the coverage, like the income coming from the retail tenant, regardless of how many apartments are upstairs, is significant. And if that tenant stops paying, the lender is not getting their mortgage payment. So I think, like, right now, the most relevant thing that we could do is, number one, hope that the federal government is really doing what they were supposed to do last night and they couldn't get their act together. Super important. It's not necessarily in our control.
But Ofer, if I could interrupt for a second,
yeah.
just ask about transactional. I want to talk about that kind of those sort of
sure,
for solutions towards the end. But in Acris, I'm looking every day and I'm seeing things.
Deals that are closing right now, the capital is already committed. The lender already committed the capital. Your LP's already committed the capital. It's a done deal,
right?
And lenders can do. Nobody needs to be in person for these big closings. People have been doing closings in escrow with a title company for years now. So the idea of needing to go somewhere to close the deal is not relevant for these deals to close. If all the capital is committed, people are buying that property. The problem is what happens if the capital is not committed, and not only that the appraiser can't go there, the appraiser doesn't know how to price the asset, or the investor doesn't even know if he wants to buy another asset because he may need the cash to float their existing property. So that is why everything is in flux.
But Ofer, I think where, just to differentiate, I am what I'm focusing on and the deals, and one of the differentiations in this flight to quality is to a group of owners, borrowers who have shown that, and this crisis is not like any other. Each one is different, and there are enormous challenges. Adam, your cat is sneaking up behind you. But I think that there are. While I agree overwhelmingly that the support needs to come and that there is this dislocation, where we're seeing the differentiation is that there are some owners and there are some tenants. And I guess on the tenant side, it goes beyond residential or multifamily. But there are situations where there are groups who are very likely to weather a major storm. And I think that there is the ability to transact at that level.
Oh, yes, there's tremendous amount of capital. The question is, this capital wants to be deployed now or in 45 days?
Well, I think that there's a lot of capital that will wait. Yeah, go ahead, Adam.
I just want to ask Maggie, I don't know, is there even a thought to be looking to buy stuff right now? Because there must be people who, not in an opportunistic sense, but just like, I'm done, like, forget it. Like, I thought things were kind of rough to begin with, and now this is just a disaster. And wouldn't someone want to just, like, get out now?
I mean, to echo Ofer's point, I think our first priority, and probably most owners' first priority, is figuring out their current portfolio,
Mhm.
and making sure operations and capital needs there are set. And capital needs are up in the air there as well, and so there's a huge unknown.
Right.
I think secondarily, this all happened very quickly. And so there were some opportunities we were looking at that we haven't altogether stalled, but we are sort of taking a breath and understanding them better, and putting into context with the rest of what's going on. And so I think you're exactly right that nobody knows what's going to happen with transaction volume. And I won't say that we're not buying in the near term or anything like that, but we're definitely slowing down and taking a breath and figuring out what's going on before we move forward full speed on anything.
Carole, could you talk about rent collection, like how you're handling?
Well, that's more on the management side, but I haven't heard of anyone saying, any of the residents saying they're not going to pay their rent. That has not come about. And not that they're going to pay less because they don't have the same services. I haven't heard that either.
Okay. And in terms of the process of like releasing people and stuff like that, how
renewals are still, management and owners are reaching out. They're more flexible on the renewal rates. Before they wanted increases, now they'll renew with 0 increase. I think they just want to be able to have everybody stay and not to have an apartment available in 30 days or 60 days or even 90 days.
Mm-hmm.
I know everyone is actively trying to get everyone to renew, and that we can see, we always did that, right? That's
Right.
something that is so important, to always know what it's going to look like the next 60, 90 days. So you can see what your exposure is. And that's something that I've always, and even with landlords that didn't focus so much on it, that was always something that I would point out so that we could really see where we were in budget marketing wise and just understand what the potential exposure is and all of that. But now for sure, they are being more flexible with renewals, and landlords that didn't want to. So that's interesting.
Yeah, no, I mean, it's the balance is it's sort of like the interest rates. It's kind of interest rates are cut to, or the Fed cut to 0, but it's the risk is so much higher. In a sense, nobody wants to leave their apartment, but how does that play out? That's sort of like,
well, I think people are, like the residents that have the means, many have second homes, some are out. I just heard from a friend while we're on this Zoom meeting that there's bidding wars out in immediate rentals in the Hamptons. So there's not the people are leaving, they know they're going to come back, but they want to be out. So there's just a lot of moving parts, like we said earlier. And for residents that, need to, like we just rented some apartments at 180 Franklin in Brooklyn, and that's right near Pratt. So those are international students, and they actually came here, and they're doing obviously online, but they're here. So there's just a lot moving and people not wanting to leave. And if they do leave, it's for a short period of time.
Yeah. So Maggie, I wanted to ask also about the rent collection issue. How are you all formally offering anything right now to tenants, or any kind of deals? Not deals, but in the sense if someone's like, I can't pay, how do you handle that?
I mean, we've certainly gotten some phone calls. It's unfortunate. There are definitely, situations where people are unemployed or experiencing other hardships. As a landlord, we still have expenses, real estate taxes, and mortgage to pay. But our priority is also to take care of our residents and their well-being, and our buildings. And so we are handling each of those situations on a case-by-case basis. We're talking to each individual resident specifically about their situation, and we don't have any sort of blanket policy in place yet.
Okay. Ofer, do you think that we'll see a further consolidation in the real estate brokerage world because of this?
Well, I think that we're going to see a lot of disruption and a lot of the way I was looking at it, I was thinking about it over the weekend. A lot of people are going to probably, if this prolongs itself more than 30 days, I think a lot of different companies and a lot of different people are going to realize that they can do things differently, right? And so there's going to be, after every major disruption to the economy, there's businesses, Maggie is now realizing that she can manage actually buildings with less on-site staff. And to some extent, that may be the new way of doing things. And brokers now realize that maybe they don't need to show as much property. And we're having this Zoom meeting with I don't know how many attendees instead of having a conference somewhere, right? And all of us are collectively reducing, helping to stop or to slow climate change, if this prolongs itself, right? So there's going to be a lot of different things. And I think the brokerage industry is also going to be, kind of one of those, the real estate industry, specifically the brokerage industry, is going to continue to evolve in New York City. And this is going to be one of those major events that presents an opportunity for some companies to consolidate.
What my recollection of what happened after the 2008 downturn was almost that there was kind of some places, a couple places got hurt, but then people started new companies. The Massey, a lot of you and some other people. It was actually kind of an expansion of brokers.
Yeah, I mean, listen, we're seeing. I mean, as painful as it is, every disruption like this is an opportunity, right? And I started my business right before the recession, but without the recession, I would not be able to catch the trajectory that followed the recession. So there's always going to be an opportunity in the recovery, and depending how long this recession is and how quick is the recovery, it's definitely going to be robust whenever that happens, right? And there's tremendous amount of business that brokers can have when volume comes back online. I mean, there's deals to be had right now, but transactional volume overall is going to slow down.
And, Carole, I think just what Ofer's talking about is very interesting in terms of the, hey, we're realizing that there's might be a different way to do some of these things.
I left Related in 2008 and I went on to do a lot of other things, and there was still a lot of business being done. I was working on a lot of projects with the DERS. There was a lot going on, at least for me at the time. And it felt, it wasn't the same as now. Now it's just, no one's really able to, very few people are able to do a lot because where the city and the state is not allowing us to do very much, So I feel like it's a very different time. I do think there's going to be a lot of different ways. And I also think the consumer and the buyer and the renter is going to they're going to expect more. Mm-hmm. So instead of just going to visit a site or a building or an apartment, they're going to want to see a lot more. I just, coming out of this, there's just going to be, in terms of virtual, in terms of pictures, in terms of design, there's just going to be more, mm-hmm. in very different ways. And so I think all of us, I know we are at Halstead and I am with other friends in the industry, thinking outside the box and what's going to be next, and on a national basis, on an international basis, and where is that going to take us once we come out of, once we come out of this, and where can we be in a different place, in a better place?
The one thing I wanted to ask, just sort of in between, whoever wants to kind of touch, this is sort of a very political question, but looking at this eviction debate over the past, the halt to evictions, and the way the real estate industry is essentially behind the curve on that. They got the advocacy group has done a very good job of pushing forward this agenda that's to have basically make it much more affordable for a tenant who would not have to pay rent right now. And some other issues like that. What can the real estate industry do to essentially get more public support for the industries that are not seen as sort of this negative group of people? I don't know. Ofer, you want to talk about that?
Listen, I hope that where we are right now is going to halt some of the anti-business, anti-landlord, anti-real estate interest kind of sentiment that we're in. I mean, when people realize that, you know, and I know that we've all seen this in the media. I mean, some people, including some people very high up, actually think that all housing should be public, right? So when people realize that without the private sector, there's really no services and there's really no city, right? I mean, there's, you know, so I think I'm hopeful that where we are right now is actually going to help us turn things around. What we could do as an industry is continue to push the narrative that real estate is just part of the infrastructure of a city. And economic development cannot happen without solid infrastructure. The city and the state cannot do everything on their own, and you need private-public partnerships, and you need private capital to help you get, you know, advanced cities and get cities to where they need to be. Even right now, in this current crisis, you need private capital and private real estate support and cooperation in getting this to the next level. And so I'm hopeful that you know, this crisis kind of wakes some people up and people kind of come together a little bit.
Adam, I think the one message for that, you know, the media can be helpful in getting out is that the overwhelming majority of real estate owners in New York are small businesses, right? And while we are chatting about some of the bigger businesses and have bigger businesses here, that I think first and foremost is understanding that the community of owners is a very large community that in most respects are very much like many other New Yorkers. And I think there has to be a sharing of, there's going to be pain throughout here, and over time there needs to be a sharing of that pain in ways that are distributed across the spectrum. But I think that first and foremost, it's to try to change the myth that all landlords are giant corporations.
I also think it's important to realize that while, you know, not all landlords are large corporations, also there are a lot of landlords out there doing a lot of good things and doing a lot of good things for their residents. I think a crisis is no better time to realize that, but that there are a lot of landlords who are out there wanting to help their residents with whatever they need going into this, and as well, I mean, and I think we all saw REBNY along with other landlords put a moratorium on their own evictions for 90 days throughout this crisis. I think there are a lot of well-intended landlords out there, just as there are a lot of bad apples too.
Mm-hmm. That's a really good point, and I think that there are, you know, tremendous initiatives underway. The one that I spoke about happens to be, you know, on warehouse properties, but we're talking about their major owners finding ways to make a huge difference in a very positive way. And I think that as those positive examples come out, then both the landlords themselves should publicize what they're doing, but hopefully tenants and REBNY and others who become aware of those efforts will applaud them. I also think that there's a role for the lending community to play, because as we go sort of up the economic scale from tenant to landlord, we then go from landlord to lender. And I think that there need to be initiatives at that level as well.
And I'd like to, so thanks. And I want to very quickly, if each of you could give what you would be asking I guess, Scott, you're on right now. Like, what is your top ask of the feds or the city or somebody to alleviate the pain right now?
Well, I think that it would probably, keeping in the same vein as going up that chain, as we go up from landlords to lenders, and then where do we go from lenders above that, we go to the government level, right? And so one challenge for a major segment of the lending market is that they are regulated by government, and government has capital restrictions. And some of those rules are not set up for situations like this. And in the same way that landlords who don't receive rent from tenants who don't receive salary checks have a difficult conversation to have with the landlord, and then that flows up from the landlord to the bank. I think it flows up from the bank to the government. And so if the government continues to find creative ways to keep the pressure off of banks to move towards foreclosures, that allows owners to avoid moving towards evictions. And again, it's that sharing of pain.
Maggie, just kind of quick top line, kind of the best thing that could happen.
Yeah, I mean, I think I tend to agree. I think
then we're going to turn to questions from the audience after. I'm sorry, after you finish.
I think I tend to agree. I think that this affects everyone, and everyone's going to feel some pain. But I think by the same token, all of the sort of stakeholders, so to speak, are going to need to come together and come to a solution together, because this affects the residents, this affects the landlords, this affects the banks and the government, obviously, as well. And so I think it's got to be a cohesive, well-rounded solution.
And Ofer, do you have any specific ask?
Well, I kind of like the idea of what the governor was just saying this morning, which was maybe we don't need to completely eradicate this virus from New York City in order to start bringing certain portions of the community back to work, because I really don't think that with all the help from the government, it's sustainable for people to live in New York City for more than 30 days, under curfew. I just don't see this as a possibility. So I think that I like that the governor kind of started changing that narrative into, okay, how would the recovery look like, and how do we start bringing people online? Because if we're not going to start looking at how the end looks like, we may end up like this for months. And if you read all the economic report and analysis, we really need to do everything we can to make it a V-shaped recovery. And if it is going to end up being a V-shaped recovery, it's going to come back very, very fast. And the only opportunity that some opportunistic buyers, Scott, or lenders would have is in the next 60 days. And after that, pricing is going to be the same, business is going to be the same, activity is going to be the same. Mm-hmm. So it's sort of like, it's interesting. I think that some opportunistic buyers may want this to be as bad as possible so they can take advantage. But at the end of the day, it's in the cities, it's in everybody's best interest to kind of bring people to work as fast as possible.
And Carole, can you think of something that would help right away?
I concur with Scott and what Ofer said. I mean, it's going to be hard to keep everybody inside. And from what I've a couple of friends that are surgeons and really understand what's going on, and the curve is looking good, and it's going to be at least a couple of months of us being inside. And that's the only way to kind of get the virus, to level out the virus. And I don't think that anybody can stay inside more than 30 days, and no one's going to be going back to work soon. So I think there's going to be some other creative ideas that the governor's going to come up with, and the city, because it's, we don't want to be Italy, right? So, mm-hmm. And that's the goal, not to be Italy.
Well, thanks. And I'm going to turn to, these are a couple questions. This is, let's see, how do I?
Adam, I'm posting on there the information about what the city's looking for on the warehouse.
Okay.
John, thank you for your question. I'll get you an answer there.
I've got a question from Randall Lieberman. He's asking, how can I prevent mass lease terminations? Legally, what tenants can break a lease? That's sort of a legal question, but if anyone has any thoughts on that.
Is that a residential lease in the multifamily?
Yeah.
You know, work with them to maybe reduce their monthly rent and work out some kind of payment plan so that they don't leave. Where are they going?
It might be going down to North Carolina or something. Just,
Yeah.
I mean, are there provisions in a lease where you can just like break it because you can't effectively live in that house anymore or something?
There would have to be a very good reason.
Okay, but,
There isn't really anything. They're bound to the lease. Even if they lose their job, they're bound to the lease.
Okay. This is a question from an anonymous listener. This is for anyone who wants to. What are your thoughts on long-term impact on multifamily space in New York? What are of long-term impact and rent compression? Like, do you think there'll be any long-term impact on rents because of this? Just even once we recover.
I think that's hard to know. I don't see it at the moment.
You know, I mean, let's just be clear. I mean, New York City has a shortage of housing, and that shortage is not going to stop because of the virus. That shortage is just becoming worse because of this virus, right? Rent regulation makes it worse. Lack of development makes it worse. We need more housing development, and then when the recovery is going to be here in 30 to 60 to 90 days, we would need, you know, after 1 month concession or after whatever workout you do with a bigger retail tenant, you know, we would need to build more and we would need to create more. So the hope that I have is that this kind of, force from the outside is going to help people realize that the vitality of New York City and the people that live here. I mean, I one of my last Uber rides about 10 days ago before I stopped taking Ubers. I was having a conversation with the person that I was with about what's going to happen. All these restaurants are going to close, and what's going to happen. And the Uber driver said, like, I can't pay my rent. What are you talking about? I'm not going to pay my rent next month, right? So the vitality of life and business and real estate are super ultra connected in New York City, and the hope is that the legislator in Albany and in the city is going to see that what we really would need is a stimulus package for the real estate industry, not another lack of incentive or rent regulation, or not something that would stop development.
This is a question for Scott. I'm not sure from whom, but it says, I hear lenders are delaying closings by pushing off mail away closings or closings by escrow, opting for in-person closings. Have you heard anything like that? Or maybe Ofer, you also, but Scott,
I was on the phone with the lender this morning, and they told me that closings are taking place right now in escrow.
But I think this person was saying, what if somebody says, I want to meet in person, and just to kind of throw
anybody who says now I want to meet in person is, yes, delaying, right? I mean, it's just but in our experience, I haven't seen that. We have seen closings either delayed or deals called off prior to being committed, and the lender was straightforward about it. The credit officer looked at the property type, which the one I'm thinking about is a high-end retail, a single tenant retail, and the lender was not committed, and the credit officer said we need to be more We need to be careful in this environment. We're focusing on the deals that we have committed, and single tenant retail is not our focus for new deals going forward in the short term. So they were straightforward about it. While we were disappointed, no one was surprised. I will say we have an offer on the table to do the same deal with a partial guarantee at an incredibly low rate from a bank who absolutely means it. They would close that deal. But they're then relying on support from a existing borrower who's they know their liquidity position.
Are there banks?
So I'd say the simple question, I have found lenders to be straightforward with what they can and cannot do and not coming up with excuses.
This was a question for Ofer. It says, thoughts on cap rate movement and overall sales activity in the market on the multifamily side? You sort of discussed that, but I don't.
Yeah, we discussed the volume, which I think, let's be clear. I mean, volume of multifamily transactions in New York City and Brooklyn specifically, but New York City as a whole, was significantly down after June 14 of 2019. This is just, another element to bring it to a complete halt. I think that right now we're going to see a stop in new transactional initiation, that you're going to see sort of in 3 to 6 months, you're going to see less closings, right? So that dip is going to be towards the last quarter, the last quarter of the year. In terms of cap rates, it's really too early to tell what would be the balance between kind of motivation on the landlord side, on the owner side, vis-a-vis lower interest rates. I can tell you that in specific situations, the appetite for yields, for higher yields, is kind of offsetting a little bit the lower interest rates. I mean, so I think right now, as before this crisis, let's say 2 weeks ago, people were opting to take the lower rate of a refi versus to sell at what was the market cap rate, right? That would be the first choice. Mm-hmm. But that's not always, there's Maggie knows, there's institutional capital that needs to exit. There's different reasons for people to sell, both small owners and institutional owners. And so there's going to be, towards the end of the year, we're going to start seeing these things kind of materialize, and we'll see where the market is.
This is a question for Maggie. This is one of these very uncomfortable situations that as a building owner, you're going to have. This is an anonymous question. We have received complaints from tenants of other tenants who are sick in the building. Do we need to post anything in the building?
So I'm not sure about the specific legalities. Our in-house counsel could speak better to that, or your independent legal counsel. But our general view has been, rumors are rumors, but if someone knows of a confirmed case, we try to reach out to the resident directly, understand the situation, and if it is confirmed, and then post a notice in the building stating that there is a confirmed case, ramping up the cleaning, obviously, in that building, and cleaning all the common areas very, very thoroughly, but also protecting that resident's privacy as well.
Okay, well, it's now 3. I'd like to thank our guests for joining us today. Once again, Jonathan Miller, who had to leave, he had an appointment already at 2:30. Scott Singer, president of Singer and Bassuk. Maggie McCormick, president of A&E Real Estate. Carole Bloom, EVP of Leasing and Halstead. And Ofer Cohen, president of TerraCRG. Thank you very much for participating.
Thank you, Adam. Thanks, Adam. Thanks, guys.
Thank you.
Bye.